Testing 1, 2, 3. I'm just doing a bit of a sound check just to make sure that everybody could hear me loud and clear as well as see my screen. I'm Kenny Simon here with you from NAGA Markets, and this is the monthly briefing and outlook on various asset classes today. And today is the 28th of February 2019, so we'll be up and running in about 2 minutes or so, and would love to see that you guys can hear me and see my screen, and if so, kindly just type into the little chat box and we can then get started. Thank you very much. I'll be back in about 2 minutes. Thank you. All right there, guys. I think we can get a move on and start the session today. Welcome. I'd like to say welcome and thank you for attending this monthly briefing and outlook on various asset classes by NAGA Markets. My name is Kenny Simon with you. Today is the 28th of February 2019, and we shall get a start. I think not sure whether you guys can hear me loud and clear. I think we've got some messages saying everything's okay on the sound side of things. So let's get a start. So we've got a couple of things that have actually been running across the week, from the start of the month of February itself, and we've got various key events or catalysts, as we call it, that have actually moved the market on various asset classes or instruments out there. So I just would like to speak about a couple of things that have actually gone onto the market, that have actually impacted the market as of today. And we're seeing loads of movements, especially with the pound. And I know that some traders, loads of traders out there are actually wondering about the pound and how the Brexit, worries about Brexit and the uncertainties that have actually came into the market from the beginning of the month of February especially, or even from mid-February itself, have actually jerked the market a little bit more and tilted the market towards the bearish side of it. But as of now, it seemed to have actually gone bullish and has actually built that bullishness a lot. So we want to ask on why that is so. So I would like to focus a little bit more on how the pound is seen to be bullish and expected to be even more bullish at this moment of time. And we've got a couple of things, but the first three things I would like to talk about starts off with the risk of a no-deal Brexit has actually faded quite a bit, and that is mainly has got a lot to do with its current consumer spending that is still up, bullish and fairly bullish from medium to long term as expected. And on the technical side, of course, that's the third sort of factor, have actually seen some resistance that has actually been taken out. So these are the three main sort of key points that have actually encouraged the pound's bullishness as of the start of the week, especially as of yesterday. And we can actually see that quite a bit coming from May's speech, as well as a couple of events that have actually stirred up positivity as opposed to negativity in the market with regards to the no deal or deal Brexit sort of talks. So this is basically one of the things that I would like to highlight. There are a couple of traders are looking into commodities as well. We'll be looking into commodities as well as crosses, currencies. So I just would like to go through a couple of events that may actually be hinting us on the current directions of these instruments or assets. But just before that, it's probably best for us to look into what's in store or has been in store as of today from the economic data side of things. And one of it that would impact the European zone would actually be the Germany's Harmonized Index, or I think it's called the GHI, and that has got a lot to do with consumer prices, but this has actually communicated loads of consumer confidence on the upside for the Eurozone. So this is another thing that needs to be factored into your analysis as a trader, mainly because we would like to look into confirmation on the technical side of it, reflected by what we hear or what we see onto the economic data side of things. So this is basically one of the things to highlight right there. We've also got GDP figures for the US and a couple of other pairs that could actually be impacted by what's going on in the market at this moment of time. Now, let's get a start on a couple of things regarding currencies in general, and then we'll move a little bit into commodities, especially gold. We've got lots of questions about gold, as well as safe haven currencies like the JPY and the CHF especially, so we'll get into that too. So let's look into currencies in general. Now, what I see from the start of the week especially till today, it's a bit of a mixed bag in currencies movement, but I do actually look into, I've looked into CHF or the Swiss franc quite a lot, and that has actually highlighted a bit of clarity in terms of its trend. So I'm just going to talk a little bit about the movements of CHF or the Swiss franc as we speak at this moment of time, based on various other tools like heat maps and volatility charts. So what I would like to do, especially the sentiments index, would give you a better clarity on what's going on. So I'm just going to be switching that screen right there, and you would be able to look into NAGA Trader, and on NAGA Trader itself, as we see on this section of the markets, will give you an idea of movements of currencies or assets, various asset classes. But if we are looking into currencies, as I've mentioned earlier on CHF itself, it's probably best for us to just type the keyword right there on your NAGA Trader itself on the market section, and you would be given a variety of trading instruments, especially if we're talking about CHF. They've got various crosses, as we call it, on CHF. So just would like to look into the USD CHF right there. And with the USD CHF, as we could see on your right, that sentiment indicator right there indicates 61% has actually been on the bearish side or acted as bears to pull down the prices of USD versus the CHF. So that is giving us hints of being strongly bullish on the Swiss franc and strongly bearish on the dollar. And that's a 61% sentiment right there, indicates a contrarian alert, giving us an idea or a hint that there may be a probability of a reversal coming soon, as has been reflected right here on the chart, the 30-minute chart as we see. Now let's just switch on to another time frame, and onto the 4-hour time frame. We could see that similarity in terms of reversal right there, and USD CHF at this moment of time is trading at the 0.9934 area or level. So we're looking into that area right there. Now, for me, looking at the sentiments and acting as a contrarian trader would give me hints or alert that there may be some bullish move expected or reversal expected. And what I would like to look at this moment of time, if we're looking into USD CHF, is to look into your current price, your current or live price at this moment is sort of trapped in between two psychological levels. One, on the upside, I would look into the 0.9950 area. Okay, so it's 0.9950, and the other one, which is just under the current price right now, is the 0.9920 area. So we could actually see that current price as we speak seem to be trapped in between two psychological levels. So if you would if you're looking into the potential of a breakout to the upside, I would look into breaking out from the 0.9950 area and above to give us a hint of more bullish participation. If not, then it would actually then be breaking down, or its preference to break down to the downside under the 9920 psychological level. Okay, so there you go. We've got a little bit about USD CHF, but I would like to zoom into CHF as we speak right now, and just to give you a bit of a hint on clarity of trend of CHF versus the other currencies. So as I see it from our research here at NAGA Academy, and going through various pairs and clarity of trend as well as volatility with regards to CHF in particular, I'm looking at bullish momentum, bullishness, probability and clarity of bullishness, CHF against the dollar, the JPY, the CAD. So these are the three currencies that CHF seem to be most bullish against. Now we're talking about a bit on the medium to long term type time frame, so we could easily say it's 4 hour and above kind of time frame. So with the CHF USD, as we can see, we've got it on the 4 hour time frame, 4 hour chart right there, and it has actually been hinted with a correction type move based on that sentiment indicator right there, because we've got that 61% heaviness of a sell on the USD side of it. So that is giving us that probability of more bullishness for the CHF. So yes, if you're trading the USD versus the CHF, then you're looking into more selling opportunities potentially, but at this moment of time, it is giving us that hint through the sentiment index that there may be a reversal. And as I've mentioned earlier on, we're looking into more confirmation of that move to be on the upside only once it has actually risen and broken out of that 0.9950 area. So that is USD CHF. Let's look a little bit into the CHF Jpy, and let's look at what's going on with that pair at this moment of time. So we have got that there. Let me just, so you've got CHF. So that's your Swiss franc versus the Japanese yen. And let's look at what's going on with this pair at this moment of time. Now, we could easily switch that to a neutral 1 hour time frame, and we could easily see that that correction is taking place very clearly. We've got that momentum building up on the bearish side of things for the Swiss franc as we speak, and it's trading at the 111.47. Now, with the 111.47, just right after the decimal point, we're looking into the possibility of it coming under the 50 psychological number. As we can see, you could easily look at the 2 digits after the decimal point, and that does give us a hint of the current price being under the 111.50 psychological number. So I would look into it as a trader, focusing and trusting the act of psychological numbers and looking at levels of psychological numbers to be breached. So that actually means that if it does actually go at least under 10 pips of the 11150, that gives us a hint that there are more bearish participation by sellers. Okay, so that's basically for the Swiss franc versus the yen at this moment of time as we speak, and we're looking at the 1 hour chart. So we could easily travel to the 4 hour chart and to give us a bit of a hint of what's going on the 4 hour chart as well. So as I've mentioned, with the research that's done through Academy at NAGA here, we're looking into more bullishness for CHF crosses, especially against the USD, the JPY, and the CAD, as we could see. And I would like to just hint that that would be more giving you more clarity from the 4 hour chart onwards, right down or right up to the monthly chart. So that's basically it for the CHF side of things. And what we would like to also look at is just to give you a little bit of clarity with the other crosses that we've actually mentioned, especially with the euro. Now, with most of the pairs that we can actually see, I've hinted on positivity regarding consumer confidence in the eurozone. So that would then give us more hints of the bullishness participation by the bulls or the buyers. So that would give us again, hint in general of more bullishness for the euro against most other major pairs or major currencies. So if we're looking into euro in focus, I would like to just look into one of the most popular currency pair first, euro USD, as we speak, and this would give us a bit of a hint of the euro's position against the US dollar. As we can see here, if you're looking to your right as well, the sentiments indicator right there, it is indicating 53% on the buy side for the euro against the USD. So that's a bit of a 50-50 at this moment of time, and we could see it very clearly on the 30 minutes chart itself. We've got that appreciation of price, but perhaps undergoing a bit of a correction at this moment of time, with the euro trading at 1.1406 level against the US dollar. And what I would be looking at is its movement to the downside approaching the 1.1400 psychological level. So if we're looking into a bridge of the 1.1400, only then it would be hinting us of a possibility of more bearishness taking place. But if not, then we would be looking at a possible correction within 10 pips or so at the 1.1400 level. And that's basically based on the principles of psychological levels. And if we are looking into price action in the past as well, by looking to your left, you'll be able to look at probable resistance area acting as support at this moment of time, but that could only be proven once it has actually breached the 1.1400 area. And that's basically what's just happened just now as we speak. And as we're looking at the euro USD on the 30 minutes chart, you could see that it's trading at 1.1404, and it's sort of flirting at the 1.1400 area as well. It's approaching the 1.1400, but has been bobbing up and down at that level right there. So we would need to ascertain the bear's strength only after it has actually bridged and gone under the 1.1400 area. Okay, so that's basically it for the euro versus the dollar. And with euro in general, I see clarity from the 4-hour chart onwards, right up to the monthly chart, especially against the JPY. So euro JPY would actually be a pair that I would be looking at or monitoring from the medium term right up to the long term. And we can do that just now by looking at the euro JPY pair. Okay, there we go. Now the euro JPY is trading at 126.36 at this moment of time. Again, it's sort of signaling or hinting us that it's trapped in between the 126.50 to the upside, and it has actually just bounce on the 30 minutes chart right upwards, and it's approaching the 126.50 area. So for more bullishness, I would be looking at the 126.50 psychological level and looking at whether or not it would actually be bridged before giving me that hint that there will be more bullish implications onto the euro versus the JPY. So that's the euro JPY pair right there on the 30 minutes chart, but it's probably best for us to just take a look at the 4-hour chart as well, and notice the higher highs that has actually been developed with the higher lows as well. So this is basically a hint of giving us more bullish expectation for the euro JPY, but I would be looking into the 126.50 psychological level as the psychological level to look out for the euro JPY on all time frames. But this would give us a hint of whether or not we've got more participation by the bulls or the buyers. So that's it on the Euro JPY at this moment of time, looking at various time frames from the shorter time frames right up to the longer time frames. But as I've mentioned earlier on, the Euro JPY seemed to be strongly bullish from the 4-hour chart right up to the monthly chart at this moment of time. So there we go. We've got various patterns as well for those pattern traders out there, as well as Elliott wave traders on the technical side of it. It would be hinting you various count of waves, as we could see it really clearly as well. So for those who are trading patterns, harmonic patterns as well, you'll be able to look into a potential W-like pattern, or better known as butterfly, or various other patterns. And I guess that would be hinting you as a patterns trader, more count of waves at that side of things. And for Elliott wave traders, probably a chance to count the last leg of wave that may actually be going on as well, especially on the 4-hour chart that we're talking about right now. Okay. All right, so with regards to currencies, we've done a little bit of screening through currencies, especially some major currencies, currency pairs, as well as crosses. It's probably best for us to look into one of the most popular commodity, which is gold. And there's been loads of interest by traders, and we've got questions throughout the day as well with regards to gold and its movement. So it's probably best for us to look into gold at this moment of time. And with regards to gold, I have managed to get a couple of research items or materials from various banks as well, and it's a result of research by NAGA Academy, and we're looking into more potential of pseudo bullish reverse head and shoulder patterns as well, that can actually be could actually be quite visible and obvious in various time frames. I mean, the clarity itself would actually prove it to be more clear in the medium to longer term time frames that we'll actually take a look right here on your NAGA Trader platform. So I'm just going to type that right through. Okay, so we've got the gold versus the USD right there, and I'll just jump straight onto the 4-hour chart to give you more price action right there on the 4-hour chart. Just going to remove that there, and at this moment of time it's trading at the 1323.16 area, or we could easily say it's at the 1320s level. But one of the resistance area that's been looked at a lot as a significant resistance level is at the 1356 area, and that's where we would like to look at whether or not that level could actually be breached and be an interest by buyers to take it further to the other significant levels. But at this moment of time, we're just looking at it from a perspective where we've got this area right here at the 1320s area that's looking like a significant resistance area, but it's probably best for us to drag that chart a little bit further to your left, if you can, to look into whether or not you've got more sort of not synergy but synchronicity in some way or another between that one level of resistance to the other level of resistance to your left. So this is for gold versus the USD, as we can actually see. But what I would try to do right here is, because it's quite clear with regards to pattern as well, we could definitely see an act of or a play of price action in the form of an ABCD pattern to the downside as well, but only after it has actually breached that area there would actually give us a little bit more clarity of the participation by bears to the downside. And once it does actually cross that area right there of previous resistance at the 1320, I would say, area or level, there may be possibility to look into support being created at that significant support area of 1300 to the 1305 area for gold. Okay. Okay, and with regards to gold again, the various methodologies with regards to price action as well that has communicated channel support break, and basically looking at an alternative scenario if it does not bounce back up at the support area to actually go lower instead, and instead following a channel support breakout. So that would be another feature that we could actually look into as a I wouldn't call it confirmation, but more of a hint that could actually be added onto your current setup, okay, to increase your probability as well as reducing your risk. And that should be the goal for most traders right there. It's a probability more than certainty. Okay, there we go. So we've got gold talked about right there. We've actually gone through various major pairs as well as cross pairs. We've also got questions about other pairs like the antipodian pairs or antipodian currencies like the AUD and the NZD. As it stands at this moment of time with regards to AUD and NZD, it is hinting more bearishness as opposed to bullishness at this point, and it is giving us more strongly bearish kind of sentiment, especially against the euro and the CHF. We can easily take a look at the AUD versus the euro this moment of time. So let's just look into the euro AUD pair, and it does actually communicate or hinting us more of a bullish or strongly bullish sentiments, especially from the 4-hour to the daily chart, and that's where clarity would be most obvious on the 4-hour and the daily chart for more bullishness. We can take a look at the euro AUD pair at this moment of time. So there we go. This is euro AUD on the 4-hour chart. We'll just go into the 4-hour chart. It's currently trading at the 1.5980 area, and it's right on the dot of a psychological level, which is the 80, last two digits of the 4 decimal places of 1.5980 area. So 1.5980. As it travels lower, or if it does travel lower in price, euro would be reaching the 5.950 psychological level, and that would be an area to mark with a horizontal line to indicate the lower level right under the current price for a psychological level. But you can also mark another level at the 1.6000 area as well as a significant psychological level. Now, if we have marked that area right there, we'll carry on in marking that area with a horizontal line right there. So that's approximately at the 600 area. Okay, and another line right under the current price, right there at the 1.5950 area. It will be soon. It will be obvious soon enough that it marries or synchronizes with various touch points, whether it's resistance level or support level to your left. There we go. So this is basically an area that we have seen the current price being trapped in between both two psychological levels, 1.6000 and the 1.5950 area. Now, if we just simply pull that back a little bit to your left, you'll be able to see all the the play of price action based on these lines and in between these two lines as well. So we're looking into a breakout, if possible, breakout under the 5950 area that would then hint us more bearish, if not on the contrary, more bullishness once it goes above the 1.6000 area. Okay, but if it does actually break out to the upside for the euro versus the AUD, what we are looking at is various touch points at the 1.6015 area, which is really close to the 1.6020 psychological level. So being a contrarian trader like myself, or for you all that are contrarian traders, would probably be best at looking at more bullish momentum coming above the 1.6020 psychological level. So that would be an area that would trigger various interest in the buys of various trader types at the 1.6020 and above. So that would depend entirely on your trading style as well as your risk appetite at that moment of time. But in terms of trend, we're looking at it as being more bearish on the higher time frame, but bullish as of now at the 4-hour and the daily chart for the euro AUD. Okay, so that's basically it on the euro versus Australian dollar. We could easily take a look at various other instruments at this moment of time, and just to look into, we've got Bitcoin right there. We've got appreciation across various cryptocurrencies on the average of 1 to 1.5%. As we can actually look at that appreciation of prices, we could easily go on to the Bitcoin right there and looking into how the price have actually played into a sideways or consolidation mode at this moment of time, especially with Bitcoin versus the dollar trading at 3908 or 3908, and that's looking at a potential of it breaking out the psychological level of the 3920 and above. So we are still looking at that area right there at 3920 for it to appreciate. If at all it does actually appreciate and pierces through that 3920s area, perhaps we want to look at the next area of a potential reach to the 3940 area. Okay, so that's just a bit of a short term on the Bitcoin versus the dollar at this moment of time. And if we look into various other pairs right there, or perhaps instruments, let's just skim through a little bit. We've got the CFDs on the German 30. Let's just look at what we could be noticing in terms of price action as well for the DAX 30 right there. I prefer to look into an hour chart first before I travel through to the 4-hour chart. So let's just do that. It's trading at the moment at the 11479 level area. We have got a play of price action supported by various peaks that has actually traveled from a high to lower highs as well, and that does actually got reflected by lower supports as well. So we are looking at a possibility right there of various downward type momentum that can actually be supporting the DAX 30 right there. Now I'll share with you guys on play of price pattern as well, following a potential ABCD right there, because it's quite obvious on the 1-hour chart on the DAX 30, as you can actually see. And I'll just we had questions earlier this morning onto the feeds as well with regards to price patterns, harmonic patterns, and various others, whether or not the question was whether or not they are applicable to stocks and various others. The answer to that is yes. It has actually been really popular coming from the stocks side of it, and being sort of brought into the forex market or analysis of instruments in the forex market. So I would like to demonstrate a little bit on how that actually works with a simple price pattern called the ABCD. Now, the ABCD pattern is not a new sort of pattern, but it has actually been improvised by many level of traders out there, but it's been really popular. So I will start off with a line drawn on that peak right there. But what matters most is the use of Fibonacci, or the applicability of Fibonacci ratios onto your pattern drawing. So on the technical analysis side of it, we've got lots of questions on how do you actually apply your Fibonacci ratios onto your price patterns, whether or not harmonic pattern, or even the use of Elliott waves, for example. So Elliott himself, many years ago, has actually popularized the use of Fibonacci ratio. So that's basically where it came about, with Fibonacci ratios being applied onto Elliott waves first before it got popularized and applied to various other methodologies in the technical analysis or technical analysis arena. So there you go. We've got a point right there. We start off with a single trend line drawn from that high point right there, because you're aiming at a possibility or probability of prices to reach lower in terms of prices. So that would then allow you to draw a pattern from top to bottom right there. So you've got your A to B, and what's popular amongst patterns as well is the AB equals CD. What that actually means is really very simple. Your length of your AB equals the length of your CD. So that would give traders a bit of a hint of the reach of prices, at which level. But of course, based on different level of traders, it's probably best for you to check your trade plan, look into your set of rules and setup that would then marry or sync in with price patterns. Okay, so here itself is just a generic play of price pattern, or how do we actually draw an AB equals CD. So I've moved that initial A to B line, and I am redrawing that line again here, but it doesn't look equal. So what I'll do is, I think it was from that peak right there. Okay, so as you can see, that length is similar. So the reason for that to be drawn that way, where AB's length equals CD's length, is to give traders a bit of a projection of where D could potentially reach, and that's basically at that level there at 11,370. But that is only a probability of price. But what's best to be done is to create a confirmation list to ascertain more trading rules based on your individual trade plan. So if we were to draw a horizontal line based on that projected D point right there here, it would be a wise thing to do to zoom out and look into that area of 11,371, whether or not, once you've actually scrolled towards your left, to find a significant support area to act as an added reason of understanding that level to be a support level. Okay, so perhaps it's probably best for us to look into a, oops, sorry about that. We could easily look into a higher time frame as well. Okay. There we go. Now, once I've actually laid out that AB equals CD's length marked at 11,371, it is quite obvious to look at various touch points, whether they are resistance or support. Now, we could see one very obvious one right there on the dot to be a resistance point, and you've probably heard of this adage where the resistance point could easily turn into support and vice versa. So that's one area to watch out for right there. And it simply mirrors or gives us a bit of a confirmation that the play of price action does actually concentrate at that 11,371 or 11 from the 11,370s area right down to the 11,360s area. Okay, so as we pull the chart to your left a little bit more, you'll be able to look into more price excuse me, price action at that level right there. Okay, so if you're finding trouble for that, it's probably best to look into bigger time frame or higher time frame, sorry, and that would then hint us more play of price action at that level there. So that's for the DAX study, just a little bit of a hint on current sentiments at this moment of time. As you can see, it's more of a 50-50 type scenario, 51% bias right there based on NAGA markets or NAGA traders sentiment indicator right there. It's quite a impressive indicator that has actually been guiding traders a lot in their analysis of various instruments that we can actually see. Okay. There we go. So we have actually visited the German 30 or the DAX 30 at this moment of time, and we're looking into more other pairs that may actually be seen as correlated this moment of time to various instruments, as that's basically what the whole webinar is about. And this is where we would like to meet you on this webinar to actually go through or visit various instruments across various assets as well to look into trends. And do feel free to ask us questions and ask questions so we can actually then be able to visit these various instruments and have a chat on it and be able to help you out. Okay, with that, I would like to end the webinar for today, and would love to meet you guys again on the next webinar that you'll be notified on the dates for the next webinar. And this is a webinar that happens once a month on sort of a market outlook, monthly outlook on various asset classes as well. So with that, I'm Kenny Simon with you through NAGA Academy and NAGAmarkets.com to actually wish you all the very best in trading. And with that, have a good weekend. Thank you. Bye-bye.